tonight. I think it's disgusting. You a member of Parliament.
Well, it seems hard to believe, but there it is. The first black candle of the year. So didn't have the kind of climactic swoosh I was hoping for at the end. We actually trimmed losses half by the end of the day. But anyway, you know, it's nice to have a break from this kind of unrelenting nonsense, particularly since today marked the highest point of the year. In fact, I don't even remember seeing the S&P at a level like 1330 for a terribly long time. Looking at the intraday action, it was sort of an upside down version of what we've normally been experiencing. That is, typically we would have the market be a little bit soft, get the bearish hopes up for the day, and then shoot higher all day long. Today was kind of the opposite. This is normal trading hours. So we were higher and got really a lot higher, up like +7 or so on the ES, and then just sank and sank and sank and sank and sank. And of course, God bless them, you know, they just had to pull off some buyers before things shut down. But it still closed down for the day, which is almost like science fiction in this market. The NQ also down, but again, the heroic efforts of the powers that be, making sure things don't get too scary. So interesting day in that respect. The euro has really captivated my my interest. I just find this endlessly fascinating these days. You can't see them right now, but I have did a lot of hand-drawn charts last night on the euro and the 2007 to 2012 time frame. It's still my favorite short opportunity of the year. I think it is completely possible we get down into the 1.1-ish type area. As far as today went, as you can see, we had a strong market through the wee hours of the morning, and I got kind of choppy and then started to break out here, and that was the peak, just as the peak on the ES, and fell pretty steadily all day and did not have the heroic stick save at the end because the powers that be can't manipulate this quite as easily. In any case, very cool. I shorted FXC right around here, and that was I think my best trade for the day. But getting away from this one-day business, on the kind of broader spectrum, the euro was approaching these important resistance levels, and so I felt pretty good about shorting it at those levels. As we pull back to like a 5-year graph, you can see here once again the 1, 2, 3 instances of these major topping patterns, and the rally we've been witnessing for the past couple of weeks I think has set up a really terrific shorting opportunity. And so there you go. Weakness in the euro doesn't necessarily translate to weakness in the ES, clearly. If that were true, then you know the complete collapse from like late October to Jan 11 would have meant something, but it really didn't to the ES. So very cool. Hand in hand with that, of course, is the GDX, the miners. Doesn't follow that pattern lockstep, certainly, but I shorted GDX a few different day trades today. Have no position in it right now, but it got tantalizingly close to filling this gap at 5692. We could still push higher. It could close that gap and then head toward the underbelly of this trend line. Entirely possible. But at these levels, gold and GDX certainly made a lot more interesting prospects. Here we see gold. I did a post on this earlier. We've got these two trend lines, which capture most of the price action, except for this area here where things got really frothy on GDX, but I still consider these lines important. And we dipped beneath that, and since the 29th of December, gold's been in heavy-duty rally mode, especially yesterday. Giant day yesterday in gold. Still up today, but approaching this kind of convergence area that makes shorting GLD pretty enticing, particularly in the face of people running around now saying $2,000 gold is just a slam dunk. Because, you know, the story is simple. Like, all right, Bernanke is going to drive the dollar down to worthless, therefore gold will have value to $5,000 an ounce. You know, it's the same story we've heard through this entire bull market of gold. I think that the opportunities on the short side outweigh the opportunities on the long side as far as this precious metal. I also, sorry to repeat myself, pointed out earlier in the day how the NASDAQ 100 did a beautiful job nailing the top portion of that resistance level. You know, as rotten as this year's been so far for the bears, I will make very clear that this trend line is not stone. It could be pushed aside, and if so, it would mean an even more bullish market. You know, this trend line represented some level of resistance, and that was shoved aside on the 17th. So, but still, it's a guideline. And we may well find that today was a one-hit wonder, and it was just a little bit of a breather to let the bulls just catch their breath for a sec. So we'll see. I had mentioned more than once a not very oft-cited bullish idea, which is DRN. And as we look at this one, it exceeded by 1 penny the price level I had laid down. I had set a price level here at 62.98, and today's high was 62.99. Still an up day for DRN, up over 2%. If we continue in the bull run, and if we pass this level, this sucker could rally even to the low 80s. But as I think I mentioned a day or two ago, these bullish patterns like here and here and here aren't guaranteed to vault higher, particularly when you're dealing with leveraged instruments. So stops are certainly prudent. I saw a handful, if you're just dying for some bullish charts to possibly look at, and we just throw them at you here. Here's DFS moving to a lifetime high, I think, and a nice continuation pattern out of this diamond. Here's Fossil, FOSL, which is broken above this very pretty pattern. NOG, soft today, but if we can really get past this price resistance level, this could be, just as this cup with handle was a very nice pattern for this one, this saucer pattern going on right now could likewise be a nice consolidation. Volume's looking a little bit skimpy though. So, and then finally, SRE, another energy issue, very strong today on this one. Very, very handsome 5-year basing pattern on this. While I've got you, I've got 8 items here in my so-called bear pen that I'm keeping an eye on to possible entries. AGCO with a stop level above 53.69. Baidu, BIDU, using a stop here would be 127.54. CBT, I would use a stop here of 36 point. Oh, that's kind of messy. Where's that anchor to? Let's adjust that. When we do these dividend adjustments, you can get some kind of funny numbers going on. So let's reset that. So 36.51. CRM, 120.01. And again, these aren't live positions. These are just kind of in the hopper, keeping an eye on them. Here's ENS, much more liberal, stop here at 31.09. MTG, nice down day on this today, over 6%. Stop here I would use would be more conservative, like at 4.30. OMN, Very conservative stop on this would be way up there at 602. A more cautious one would be even at above today's high at 562. And finally, Vertex, although I confess pharmaceutical companies tend to scare me a little bit. VRTX, I personally would set a stop here at 37.16. So anyway, nice that the market fell a touch today. I remain very lightly committed. Kind of 30% is my magic commitment level these days, 70% in cash. Just, it's all about capital preservation. So we'll see where Friday takes us. If we have another up day, I think it'll just render Thursday as nothing more than a breather. If we get some sustained weakness, maybe there's still hope. We'll see. That's it for me. Bye, everybody.